The first atomic bomb was dropped on Hiroshima.
Oh, the humanity!
The fires of frustration and discord are burning in every
Let us
city.
not forget for a moment the toils and efforts that lie ahead.
They say that those who forget their history are condemned to repeat it. This is the History Lessons Podcast with certified financial planning practitioner Patrick Huey, author of History Lessons for the Modern Investor, and your guide to financial wisdom in the past, present, and future. You ready? Good. Let's get historical.
Hello again, I'm Patrick Huey, author of History Lessons for the Modern Investor, and this is how history can help inform your investments, retirement, and tax planning for the week of October 20th, 2025. And today we're focusing on when shopping became a social experience. Because on October 25th, 1956, Southdale Center opened. On that day, a crowd gathered in Edina, Minnesota, or should I say, Minnesota, to witness a vision of post-war America, the grand opening of Southdale Center, the nation's first fully enclosed, climate-controlled suburban shopping mall. Dreamed up by the architect Victor Gruen, a Viennese emigre who wanted to create a more modern downtown, Southdale wasn't just about buying socks and toasters. No. It brought department stores, specialty retailers, restaurants, and even community spaces under one roof, all protected from the wind, the snow, and the uncertainty of Main Street. Set amid a sprawling parking lot and surrounded by highways, the mall was a bet on the burbs, rising influence, and the deep human desire for convenience as well as connection. Southdale's recipe was retail as experience, not just as necessity, and it would inspire thousands of copycats, transform how business met its customers, and launch a decades-long boom in commercial real estate and American consumer culture. But even the best innovation requires evolution, as the mall era would come to learn. So here are 4 lessons for modern investors from the mall boom that began that day at Southdale Center. First of all, success comes from solving for lifestyle, not just from products. Gruen's genius wasn't inventing shopping itself, but seeing how Americans were living and how little traditional commerce was keeping up with that lifestyle. Investors, founders, and leaders often fixate on making the best product, which is great. But often the real payoff comes when you solve for changing lifestyles, new demographics, and unmet habits. Great companies, and therefore great investments, go beyond what they sell. They ask what's changing, how, where, and why people are engaging with it. Second, when access increases, so do expectations. Southdale put choices, brand, price, style, on a bigger stage than ever before. But that same innovation that excites customers also raises the bar. Convenience, selection, and comfort become table stakes instead of differentiators. So investors need to remember, as access to markets, data, and products grow, think ETFs, instant research, etc., it gets harder and harder to impress or surprise us. Third, beware the risk of commoditization. For decades, enclosed malls were the thing, yet as consumer preferences evolved, sameness crept in, and many malls struggled to stand out. This is a form of recency bias, latching on to what has worked, even as the context shifts beneath you. Don't build your whole strategy around yesterday's winning formula, because markets change, and loyalty is fleeting if you stop adapting. Finally, every boom contains the seeds of its own destruction. The mall era felt unstoppable. That was until e-commerce, changing demographics, and new urbanism challenged the basics of what a shopping experience even meant. Well, the same thing happens in portfolios and in industries. What looks like a forever boom is often fertile ground for the very next shakeup. So investors should monitor not just current returns, but structural forces, technological, environmental, generational, that are poised to upend complacency. One final thought. Southdale Center is still there. It's remodeled, repurposed, and evolving daily. But it's reminding us that physical footprints and customer journeys never stay still for long. In investing, as in retail, your greatest strength is anticipating need, sure. But it's also facing disruptions with a willingness to rethink, revamp, and rediscover. So don't just chase the next boom. Build for the moment and plan for the future.